Bhavik, it's a pleasure to have you with us. I mean, this is genuinely a conversation I've been looking forward to. Uh, there are many, many conversations that I've been having in last few days. But I think this was one conversation which is important and exciting at the same time, largely because of what you created, right? Is an absolutely phenomenal support structure for many, many founders out there, right? So on one hand, while it's a fintech, on the other hand, it's a massive support capital play that you've kind of constructed together, and it's now available for many founders out there, right? Who are in growth businesses, right? And there's a very focused support that you bring to the table. So welcome aboard. It's a
Thank you.
fantastic session that I'm looking forward to. Good to have you with us.
Pleasure is all mine, Ashu. We've had some fantastic conversations over the years, and I think you've rightly captured the ethos of what we're connecting over is saying,
Right,
how do we find ways to back and build this ecosystem of new age entrepreneurs and emerging brands
right.
of India and Asia? And I think that's something that you and me have always connected. So I'm equally looking forward to this conversation.
Bhavik, before we dive into the question today, before we get into our discussion on GetVantage and kind of comprehending the model and a lot of work that you've been doing, I think it'd be fantastic if you could take us through a quick round of introduction will be helpful, right? I think you've been a working professional before you jumped into kind of creating GetVantage, right? So just take us through your journey and from there we start.
Sure. And the best way to capture my own journey is I truly am a founder operator at heart.
Right,
And interestingly, Ashu, I come from a family of businessmen. That's where I grew up
right,
in. Never joined the family business, but the summers and that foundation. And now, of course, we call it entrepreneurial journeys, founders, etc. But
right,
really, the seeds are of businessmen and business family background.
right,
Born and raised in Bombay, but I spent a lot of my early career in the Bay Area and the Valley.
right,
And there again is where my entry, very early days entry into the world of fintech and technology in the Valley, literally.
right,
Uh, and I say this as humorously as I can that I've been part of this ecosystem, the startup and the fintech ecosystem, even before this was this fancy
right,
buzzword called fintech. Uh,
right,
and from having a good experience and having got an exit for a venture there, moved back to India in 2009-10 and spent the last decade literally scaling and building my last venture called It's Cash,
right,
which we also took to a fruitful exit to a large NASDAQ group called Ebix a couple of years ago.
right,
Uh, and so again, spent literally a decade plus in the fintech ecosystem myself. And I
right,
think one of the interesting things is I love building categories, actually. I
right,
love being at the front end of building a category. And so, as I say, I was part of digital payments and fintech even before it was
right.
this mass word and a
Tech,
buzzword. To now, after having spent a decade in fintech, I think really what we are driving and doing now is TechFin, which is what we
right.
say is tech-driven funding and tech-driven financing. So just happy to always be at the front end of a category
Right.
creation and innovation. And I think that's what we want to achieve through what we're doing interestingly at GetVantage.
Lovely. Bhavik, like you said, we've had opportunities where we've spoken about a lot of this, right? And I think it's for the audience, right? Take me through the journey of building GetVantage, right? And I think it was around the time when we'd spoken, right? Around the time you were kind of you were in a very, very early phase of inception of GetVantage, right? It wasn't a concept that came through as clearly, for example, right? This was a category that never necessarily existed. I mean, it
Yeah,
existed in a very
yeah,
informal way. It
true.
existed in private circuits and circles. It was not something which was available in a structure which is institutionalized, right? Where anybody could enter it and anybody could utilize it, right? For their requirements of capital, right? So take
Yeah.
me through the journey of building GetVantage and the construct of GetVantage, right? I think it'll be
Sure.
interesting to understand some of those aspects.
So, Ashu, as candidly as I can share and honestly as I can share, this was not a eureka moment. It was
Right,
not an idea that happened overnight,
right,
like a lot of founders would say. No, this actually was born through my own experiences as an operator and a founder, right?
right,
In my last journey, also building a digital business, we realized that when you're building these digital businesses, to be able to have access to short-term growth capital,
Right.
is always still so much more difficult, and so much more difficult in emerging markets like ours,
Right.
in
Right.
India and Asia, right? And so those were the early seeds of saying, if we are building digital businesses of the today and tomorrow,
Right.
we don't have collaterals to give to
Absolutely.
traditional lenders and banks, right? We
Right.
don't have piece of land to give, right? We are building
Right.
asset-light businesses.
Right.
So if the way the businesses are going to be built are different, then the way we should be able to have access to capital, the way we should analyze these businesses also have to be uniquely different.
Mhm.
And so those were the early seeds of gap, thought, and opportunity
Right.
that triggered in me as an operator and a founder itself. And from there on, Ashu, the other surrogate to share with you is, look, we've seen, especially in emerging markets like ours, we've seen the last decade, we've seen commerce go more and more digital.
Right.
Payments following suite.
Right.
Finance has to follow, right? If
Right.
commerce has gone that much more e-commerce, and payments finally happen so much more digital, right? And this is literally my last decade's journey, right? We
Right.
took commerce online, we took payments online, right? And now financing has to follow where growth is going to be. This is where the next phase of consumption story of India and Asia is going to come from.
Right.
And so it was very clear and obvious that we had to find alternative ways to fund and finance this growth sector.
Right.
Right. And I think culminating all of that is where the early seeds of GetVantage and revenue-based financing were born.
Right.
Another one to share with you is, look, we are not disrupting anything.
Right.
Many times you will have founders say this, that we are disrupting this or that. We're not disrupting anything. We want to just simplify venture finance. Right. And the way to simplify venture finance, Ashu, is through revenue-based funding, where it's, for years, finance and credit has gotten very structured and overcomplicated. Balloon payments, bullet payments, reducing interest rates, right? Warrants, convertibles, right? Simply speaking, can we give capital advance? Can we give growth capital to a business? Right? Charge a small flat fee, right? So you as a business know what your cost of that capital is, cost of that borrowing is, and you pay this back as a small percentage of your future revenues and your cash flows, right? This is what we really call this performance-based financing and revenue-based funding. Just very, very simplified model. Take your capital, grow your revenues, let your future revenues and cash flows pay back, right? And keeps you that discipline and keeps you to the next phase of growth, etc.
Right.
Now that's Ashu, what is revenue-based funding, right? That's the quasi-equity structure of how we do simplify venture finance.
Right.
But really, it's not just the what we do, but really the how. And the how lies on the tech-driven platform. The how lies that if we are going towards a more and more digital-first nation, more and more digital-first brands, emerging brands are that much more online, then really the new asset for all these businesses of the today and tomorrow is the digital data and the technology platform. So can we really build a platform that can evaluate, connect, fund, and collect back, right? All of this with these digital businesses. And that's really what we call as TechFin, and a tech-driven or a tech-first financing business, and a platform that is very data-driven.
Right.
So that we really finally, actually, like you said, the way we really want to inspire and aspire and fuel this growth of the emerging brands of the country is really do non-bias, non-human bias funding, and more data-driven and performance-driven funding, right? So really, you should get backing based on how you are doing as a business and how you built it, not just who you know in the community to get funding.
Very interesting, Bhavik. I think I kind of understand where you're coming from, and I think I kind of, as the construct of it, there are many pieces that I really appreciate about this. This form of financing, right? And the fact that this is not a typical bank financing, right? This is not something which, where, like you said, right? This is in a way very, very democratized, right? My next question to you is, I would want you to deconstruct how it's structured, right? Give us a sense of how an engagement between GetVantage and an organization or a startup is, right? Give me a case study, or if you can give me some pointers on that one. it'll be very helpful to understand the construction of that relationship.
Sure, sure. And look, it's as straightforward and simple
Sure.
as saying that you are a business, and we call this and we say that we are a nation of
Right.
SMEs and small businesses, right?
Sure.
So again, to clarify for everyone who's listening, GetVantage is not only funding startups.
Right.
What we're really funding is every small business, every
Right.
SME that is coming that much more online, right?
Right.
And online in terms of how they want to reach their consumers,
Sure.
how they want to deliver the product or service to
Right.
the consumers online. And for this entire ecosystem, and really, it also drives Ashu from that opportunity that we all are going towards, right? I think right from our PM to the nation's mood is the Atmanirbhar, saying local brands, local Indian brands. And if we have to fuel this, right, we have to create a platform that connects that seamlessly to these brands and businesses that are driving that much more online. And what we do is a very, very simple three-step process.
Right.
You as a business can just log in, come online to GetVantage from anywhere, any part of the country you are in, and the smallest, more remote middle class. A simple, straightforward online application, right, where you are connecting a lot of your platforms, your Google, Facebook spend accounts, your payment gateways and your revenue accounts, your merchant platforms, your GST, your bank statements, and really just purely from a very, very tech and digitized play.
Right.
We're not like the first avatar of fintech where we took paper applications and just digitized it, right? Or paper KYC and digitized it. Really here, everything right from data comes from the source of the business. And it's really to understand, right? You as a business really need capital for what? To grow your digital marketing or your digital spends. You need money for logistics if you're a product business. You need money for cloud hosting if you're a SaaS platform or a content or subscription business. So really your need for capital is also that much more digital.
Absolutely.
And so you come online, come to getvantage.co, start your application, just plug in a lot of your data points through an API. We underwrite, analyze all of this data, and give you a very simple approval and funding quantum. And this funding quantum is literally 3 parameters. We give you the quantum that we can fund you with, right? And this could be anywhere, Ashu, between 5 lakhs to 2 crores, right? And we say, we'll give you this capital advance with 1 flat fee. So you as a business now are going to get this growth capital with a small fee that you have attached to it. And so again, there is no interest rate, there's no fixed EMI, there's no fixed tenure, right? And you will now use this capital to boost your revenues, grow, and you are going to pay back this principal and the fee as a small percentage of your future cash flows and your future revenues. Right? And this is also collected literally from your digital sources of revenues coming in, right? And that's how we de-risk the entire model. And that's why we make this a very performance-driven funding model, where literally we say that there are no rejections on the GetVantage platform. It's literally, if not now, then when? And if not this much, then how much, right? Because we can even give you and fund you with the first quantum that could be slightly smaller. But as we do 1-2 rounds with you as a business, we can continue to keep upping the game and giving you more growth capital. And the last piece to stitch this all up, Ashu, is how founder friendly and frictionless this is. Because think of this, there is no collaterals, there is no equity dilution, convertibles, warrants, right? It's a very, very straightforward, and that's why we call this democratizing access to capital and simplifying venture finance, literally, right? And doing that completely, very, very digital and tech-driven approach allows us to continue to reach as many small businesses, emerging businesses in the country that are out there.
Very interesting. Bhavik, I have a question around the source of funds, for example, right? Now, how is this structured, right? Do you operate as a marketplace? What is typically a deal closure time? What are some of the preferred sectors that you operate in, right? For example, and we've spoken about this, right? D2C is definitely something which is emerging, right? In a big way. And there is, and like you said, right? There's a huge traceability of all of that. There is something, you exactly know where the revenue is coming from, the sources of revenue, at least a large part of it. and you know where the spends are essentially happening, right? So a lot of traceability comes into picture, which essentially sort of gives you a massive advantage to understand the complexities around that business, right? Which are the preferred sectors apart from D2C? I mean, you highlighted SMEs, MSMEs, but I think that's a large enough space in itself, right? So if you could give me a little bit of an understanding of that, I think it would be helpful. And second, are you operating as a marketplace, or is this structured in a slightly different way?
Sure. So first and foremost, like I said, every small business out there, every SME out there that is digitized and at least has some percentage of their revenues and sales coming in from digital sources and digital means, right? I think that fits the bill for us. But to give you a little bit of a flavor, today as GetVantage, we've funded across 17, 18 different categories of businesses. Right? This is across, like you said, e-commerce brands, D2C brands across different categories of personal care, home care, apparels, you name it. But also over and above that, right? B2B SaaS businesses, right? Platforms that are catering to the globe and reaching through digital spends, right? But really building businesses out of India as a small business and a SaaS business. To then Ashu, also a complete range of edtech platforms, e-learning platforms, healthcare platforms, because think of this, all of these are businesses that are driving reach and revenues from a very direct to consumer aspect, right? Some of them are on-demand services businesses as well in our portfolio. And lastly, to tell you, it's very, very consumer internet businesses that are subscription driven, right? They need money to acquire these customers today, but they get their revenues over the next course of 10, 12 months, right? On a subscription base. And today, I think we're buying everything on subscription. I think we're getting milk at home on subscription, grocery on subscription, right? And so I think this gives you a nice flavor of all segments, as long as there is a digital means of reaching consumers and driving sales. And last but most interesting segment, right? Which we are the most proud of. Because Ashu, what we've been able to do in our portfolio is 40% of our portfolio today is where we've backed women-led entrepreneurs and first-time entrepreneurs. Right. And this is what drives the passion to me. Of course, we're building a business for profits, but profits with passion and purpose, right? Because when you're able to back a lot of these bootstrap businesses that are micro industries in a way, or they're run by first-time entrepreneurs, or they are family-run businesses for generations that were offline, but now are trying to build a little bit of an online reach, right? And that's where we are able to come to them with that much more support. So that's literally the length and breadth of all that we've been able to back. And I think, look, we all know today that in the last 10, 12 months, yes, we faced a crisis, we faced a pandemic, but I think what's gotten more evident is we've seen a great inflection point, right? Whereas consumers, we are now consuming everything that much more from an online and a digital source and means. To your second question, yes, absolutely. While we've seen this upsurge on demand, GetVantage fundamentally acts as a platform and a marketplace where just the way, and think of this, right? For all your users to get a quick and easy sense, what Amazon did to the e-commerce world is what we are doing to the funding, right? Which is literally, we built this amazing platform. We handle the entire user journey and experience. So for you as a brand and a business, it's GetVantage, right? From your application to our underwriting to funding you. But on the back end, absolutely, Ashu, we have tons of very, very marquee financial institutions, NBFCs and debt funds and family offices who really love this new asset class. This very tech-driven way of RBF, right? Which allows them to fuel growth for these very, very fast-growing businesses, fast-growing online businesses, right? And I think that's what we've been able to do is get a lot of this untapped capital that is out there in financial institutions, but really the way to reach these new age businesses, disbursing it digitally, collecting it back digitally, is what really we've been able to drive as a platform. And so to answer your question, look, the beauty of our platform is everything is completely online approved. We are able to issue you a term sheet literally in a couple of days that you connect all your tech and data. And yes, when we say that the first round of funding that we do, we like to understand the business, there is a handshake, but all of that is within a week, literally speaking, right? And the beauty of this business and the platform and the tech-driven approach is that we give you the capital the first round. We, of course, see your performance and repayment of all of that and your performance as a business. We continue to monitor your business. But every time you need the round 2 and round 3, we're able to disburse that literally in 48 hours because we already are connected. We know your business. We understand your pattern. And so GetVantage becomes this great partner of growth. Right? You can take different kind of capital. You can take equity capital. You can take angel investments, institutional money. You take bank loan. But at the same time, I say that RBF and GetVantage is for all businesses. Right? Because you can always at least have a partner for that quick seasonal capital, bridge round, booster capital. Every quarter, you need either money for inventory or increase your marketing. And you have a partner that gives you that quick round of short-term capital that you can grow your business with. Right.
So I think that's a phenomenal layout that you sort of put out, Bhavik, right? And I think I kind of understand where you're coming from. I think the requirement is, I think angel investing or, for example, venture capital investing, or I think many other forms of financing, I think overstructured, right? Which essentially make it very difficult for a business owner to sort of go out and and fulfill all the requirements for getting that capital into the business, right? And here it is where just by certain disclosures, and giving a visibility in terms of the financing or the financials that they have, I think is a source of funding, right? Bhavik, my question, which is essentially in line with the earlier question that I asked, right? While you operate as a marketplace, right? And this is something which is relevant for many fintech companies, right? So there was essentially a tech layer that got created on top of the existing NBFC structures, financial institutions that we had, banking, many others, right? And essentially there was a relationship which was stitched together to an FLDG like structure, right? Where essentially these tech players wrote their own risk profiling layer and mechanism, right? And essentially the other institutions essentially bought into that risk, right? Through this route of FLDG, right? When you open up your investments to many of these people, these institutions that work with you closely, right? Is there a similar structure in place, or are they coming in and knowing the risk that is associated with the asset, right? How does that relationship play out, right? Is the risk managed by GetVantage? Is it, or how does that piece work out when they're investing?
Sure. So firstly, I think when you do something that is so differentiated and tech first and digital first, right? One of the aspects, Ashu, that we've also innovated around, and we literally can claim the spot for having pioneered and done this first in this part of the world, is fundamentally how we've innovated on also the supply side, right? So what I say that ultimately, if you can find a way to better evaluate risk and future potential of the business, right? It's literally rewriting the rules of what a credit policy or underwriting policy, to your question, right? The risk management. Now, yes, what we've done is fundamentally, and the most proud of the fact that as a new model, innovative new model, first in market, we've also proved that putting with a lot of our large financial institutions, NBFCs, debt funds who partnered us, showed them the risk appetite through a vintage, through a portfolio, and then scaled up, right? And we've really shared the risk, and we've taken all ownership in also how we've been able to manage the end-to-end life cycle of application, disbursement, to also ownership on collections. And most important is the live monitoring. And so I'll tell you what we've innovated around is that, as I mentioned to you, when you back a lot of digital businesses, it's really looking at what is their new data points, right? It's the live data that we are able to drive from these businesses in real time, right from their source, right? Gone are the ways of rear view mirror underwriting, right? You look at a business's last 3 years balance sheets and tech returns, it gives you some pattern, but that's still very obsolete data in today's dynamic world. It's my last quarter's performance, last month's performance as a digital business, right? And so being able to look at live data over the last 12 months directly from the source, right? Seeing how the business is spending, how they are generating their revenues, it gives you a complete different horizon to analyze the business, right? That's the first way we've de-risked a lot of our partners, and they by them doubling down and increasing larger deadlines is just a proof of that, putting that how we've already shown that with portfolio and growth. And second piece, so it's live data that builds less risk. And number two, Ashu, it's these ability for us to also collect on a daily basis from these businesses, right, is where we are driving what we call as the live monitoring. That same data points that we use to analyze a business during disbursement continue to be during the tenure of repayment as well, right? And so this is the live real-time collections and live monitoring, which is what a lot of our funding partners at the back end and our capital providers really call this as the new collateral. Gone are the days where you have a perceived securitization with physical collateral, right? Having the machinery or property is just a perceived collateral, right? When you go to liquidate, we all know the hassles and the value dropping, right? So really what the new age of collateral is the daily collections and this live monitoring, which is further de-risk the model very, very thoroughly. And I think that's what I want to share very thoroughly, that look, it's not again just revenue-based funding, but really this tech-driven and data-driven approach, both on how we are funding businesses to also how we are pooling together a lot of the dry capital and the dry powder, what we call is that we use to fuel and fund a lot of these businesses. And so I think that upsurge has not only happened on the demand side, but also on the supply side, because traditional financial institutions have a lot of capital that needs to be deployed. I think these lockdown times have also stopped a lot of traditional way of physical SME lending, right? So we are sitting with a lot of capital out there that needs to find its way and get deployed. And last but not least, to your question, the penultimate part of de-risking in the model, Ashu, is, and I have to touch this upon, which is that ultimately, we're not just providing capital. Capital is the first cold start problem that these businesses need, right? And that's where you see, really, we don't call ourselves XYZ Capital, right? We call ourselves GetVantage, and really that it is about providing that additional vantage point to every small business founder, business owner that wants to grow its business, to every shareholder, every stakeholder, and even our funding partners who get new access to being able to understand how these businesses and digital businesses are growing. And all of us to participate in this new economy, what we call as the internet economy that is growing around, right? With tons of supply, etc. And that's why we say that GetVantage is truly a founder's platform where we provide capital plus support, intelligence, and efficiency. And that further de-risks, because we are so tightly skin in the game attached with these businesses, right? That we provide them the capital, but also the necessary tools in the ecosystem, be it marketing, be it digital marketing, be it better logistics partner, better payment gateway processing, so that we get their efficiencies and get them to the next stage of growth. And when you're providing this, you're literally a founder's platform. And that's really what further de-risks the model.
Wow. Bhavik, there's a very interesting side to this entire, the funding model that you created, right? Which is the ecosystem. And I'll just come to that in a bit, right? But before that, I have a question which is specifically around, what COVID has brought about, right? So while there has been a huge surge, there's been a huge adoption when it comes to digital, right? One thing that COVID has definitely done is it's brought in a good way, which is, I think, very, very positive for many businesses, right? Like, for example, GetVantage, is bring in a predictability in the behavior of the consumer, right? Because the consumer is consuming from essentially just about 3 or 4 or 5 sources now, right? And of course, there is a lot more understanding that one can build, right, around the consumption patterns of a consumer, right? Influences and so on and so forth, right? But what is also done is that now we are exposed to, a lot more content, right? Which essentially means that the influence is going to be very, very dynamic, right? In nature. What that also means is that the arbitrage that one had, right, between, say, a certain market, say a tier 1 market and a tier 2 market, is now going to shrink, right? Where all the markets are going to start behaving very similarly, right? Given that there is, and of course, now there is liquidity, right, in the consumer's hand, right, to say deeper penetration of credit cards, easy personal loan financing, and many other sources of financing, right? What it possibly will also do is that a lot of products that had a life cycle of, say, idly 4, 5, 6 years, right, while they would have peaked, right, from starting out to building awareness to sort of consumption getting driven, virality, so on and so forth, right? A lot of that will essentially look like a fad. From, say, that 5, 6, 7-year period, it will essentially just sort of come down to about an 18-month period or a 24-month period, right? And then it will fizzle out, right? Does that means that one, the risk of funding such businesses is going to become very different, something that, the older world credit models weren't prepared for. That's one. Second, do you think risk is going to take a very different kind of a shape, right? And I think such instances and such aberrations will have to be factored in at a model level, right? While you continue to participate in the growth of businesses, which are going to be operating in extremely competitive, unpredictable markets, right? What are your thoughts about that?
So, Ashu, one is in your question itself lies a lot of the answer that I'm going to share. I think what you've also just highlighted is that COVID technology, what that has really done is allowed a complete new set of small businesses, entrepreneurs, and brands to come up and live, right? And I think this only further accelerates the future growth and consumption stories or the growth journey of the India story or the emerging market story, right? And further, what this has done is taken away access and power from a select few, and democratized it that you could really build the next big emerging brand in any category from not only a tier 2, but a tier 3 town and be able to supply all across the country, right? And so there in its case is where I personally and passionately believe that we have to fuel first that consumption story with a model that's suited for that growth, right? Which actually says ultimately that, look, not every business has to be a valuation and exit play. Of course, different funding structures have different models of different outcomes, right? But what this also means is we can have lakhs of businesses that can be good 100 crore revenue generating profitable businesses. Not all of these brands have to be a valuation and exit story. These can all be very strong, sustainable small businesses that will continue to boom. And so we have to find another structure of fueling that growth, which is not dependent on that business's exit and valuation, right? And so I say that India especially needs all forms of capital, right? We are a capital and credit starved country. We need all forms of capital. We need global capital. We need venture capital, private equity money. Every business needs different kind of capital and different growth. We need bank facilities as well. And why do you think that even today, the top of pyramid is that this is SMEs is a priority sector for lending as well, right? So I think a lot more capital needs to find its way to this, right? But also new structures. And that's what RBF offers, right? What we are funding is the business's growth, not its necessary outcome as a brand, right? And what I really mean by that, Ashu, is let's look at the private equity model, right? Grew up a few years ago, 50, 60, 80 years ago, in the Western markets, in the Silicon Valley, right? And that was predominantly saying, can we fuel tech businesses? Can we fuel a few that could have exponential growth and could expand across the world, right? Doesn't necessarily fit in a lot of D2C and e-commerce brands that are homegrown. Doesn't necessarily need to fit in hyper-local models of service and delivery, right? But what at the same time has happened is with the growth and expansion, and do look at how the entire internet economy is fueled. You have tons of payment gateways like the Razorpay, Cash Freeze, PayUs from there. You have third-party logistic players like the Shiplights, Shiprockets, right? That entire, you have Google, Facebook kind of becoming synonymous with digital marketing. You also have platforms like Shopify, right? Being able to bring any business live and online, right? And so, Ashu, really what it changes is that are we being able to give short-term capital, short-term debt for these businesses? And if you can do this in a very disciplined fashion. So the last part, I know what you're reaching to ask is, if these businesses are not going to survive or not going to sustain, right? And that's where that ability to be very short tenure and tech driven as well, right? Can I give you capital, rotate it and bring it back and allow you to discipline? The indiscipline happens in traditional lending, Ashu, where you give money to a business and you're only taking interest back for 2-3 years and you have to really prepay principal at the end of the day. That's where a lot of business dynamics change, right? And the beauty of RBF, and I'll tell you, this is what our founders and small businesses have told us, that really when we are paying a small sliver effect of our daily revenues as repayment, we've repaid and we don't even know when this happened in the disciplined fashion. And also this is great for our cash flows because we don't have to, at the end of the day, or end of a tenure, or end of a month, have to accumulate our cash flows and pay back. That's when it becomes a pressure, when I have to pay a large lump sum at the end of every month or end of every tenure, right? And I think all of these are the subtle innovations, right? That really, we believe that we are going to find an alternative. And that's why we say this is what is considered as an alternative today.
Right.
Surely, Ashu, will become mainstream tomorrow. Because the last piece, a lot of our founders have come back and business owners have come back and validated for us, is saying that why should I have to pay back a fixed EMI like a traditional tenure or a loan?
Right.
I should, and these COVID times, Ashu, in your own question, has taught everybody that even a business should be able to pay back how they've performed and as per their cash flows.
Right.
Right. I'm taking a working capital loan, but I have to pay back a monthly fixed. Right.
Right.
There is some dichotomy there any which ways. So if I'm taking money for working capital, if I'm taking money for my growth, I should be paying back as a performance of how my cash flows and growth have performed as well.
Right.
Right. And sometimes, and some months my business does well, I'm happy to pay back faster. Some months they don't. And that's the skin in the game model. And that's what we baked in, Ashu, into our model and our thesis. Right. And I'm not going to go down that path of talking about machine learning and AI, but really,
right.
Our ability to take a portfolio exposure, Ashu,
right,
over and above, right, which is cross sectors, cross categories, and like I mentioned, all of this real time understanding, analysis, and real time rotation is how we are de-risking the entire model, innovating it. Then, most importantly, this is where we believe capital has to flow in to fuel those next, 1 lakh brands of India that need to kind of prop up in the next 5-10 years.
Right. I think, Bhavik, very interesting take on this particular bit, right? And I understand, right? I think the way we are right now, and I think the way, I think we're still in very, very, it's a very cursory, position that we're in, right? I think things are still very, very tentative. I think still things need to settle down, and I think possibly, I think there's only a little more visibility around the question that I asked, right? I think models are going to become a little better, and I think there's no doubt about that, right? And I think even consumer behavior, for example, is going to become a little more predictable, right? In that sense, and I understand where you're coming from, but I think one thing which is very interesting that you are doing, which is unique to GetVantage, is that you created this ecosystem of many support. You've created a support ecosystem, right, for many founders that you're going out and actually funding. And what that essentially means is that these are people who will not. So while there could be answers that are difficult to find and solicit in the market, right, there is a layer of people, there is an ecosystem which you've created, which is always available for your founders to go out and speak with very quickly, understand and possibly comprehend the situation, and improve their business performance, right? That essentially means it's an added layer of risk mitigation that you created, right, in a very softer sort of a way. Yeah. Tell me a little more about that.
No, and it stems from very, very deep-rooted thesis and ethos. What GetVantage stands for, right, stems from me, where I mentioned to you, we truly are a founders platform.
Right.
We are a bunch of founders and operators who've come together to build GetVantage. Right. And we are backing that many more founders. And I think that's where you come and understand that what a business really needs. The businesses of the tomorrow are different from the businesses of the yesterday.
Right.
Right. And so really what you need as the businesses of the today and tomorrow is a little bit more support than just the capital. Capital is the first cold start problem, right? Give business the capital that allows them to be that much more tightly knitted with you. But over and above that, can you give them help on intelligence, efficiency, support, right? To conquer this new age of the internet economy, right? You bring together this ecosystem of all service providers,
right,
and platforms that are backing this new age online businesses. And what that does is a business needs money, but also needs a better help on performance marketing so that they can build a little bit more efficiency. A business needs capital, but also help on distribution, logistics, and warehouse, right? And when you start really supporting a business on multifacets, right? What Ashu, you rightly said, is one is from our perspective that you're mitigating risk because a business is now really connected and he's not looking at you just as another capital partner. He's not looking at you at a traditional way of saying going and taking a bank loan or taking lending from a traditional business, because you're not just the capital provider. You're really a partner in helping them fuel and grow their business.
Right.
Right. And Ashu, ultimately, right, it's our belief and conviction that if you de-risk the model with multifaceted support to help grow a business, you are adding a tech layer to add that much more transparency, visibility, and real-time viewing into that business. I think what you can always do is funding and credit will always be a risk-driven business. But if you've mitigated with all of this, then really what you're leaving out is, yes, there will be a few willful defaulters or people who want to commit that. But if you've really driven that much more, I personally believe that a founder never starts out from wanting to commit fraud. Founder starts out from wanting to build a business. If you're helping them build their business, unless and until something goes majorly wrong in the business, and which is the risk you bake in to your business model. But unless that, if you demitigated, and that's why I wanted to leave you with the last piece, right? Is to look at GetVantage from really and appreciate the multifaceted approach, right? Which is not only is our underwriting, disbursement, collections, and monitoring that much more digital, but add the layer of founder support and ecosystem where you're also providing them the performance marketing tools to bring better efficiencies, right? You are now tied so much more vested into the business. And that also makes the conversation so much more different. Today, founders don't want to go out and say, I just want to raise money. I want to grow my business is the problem you're solving for the business. And that's what leaves us as truly a founder's platform. And yes, Ashu, early days, but really the conviction, the validation, the support we are getting, where you'll be surprised, not only businesses that we funded in the last 12, 18 months, the same founders are also coming back and saying, we want to help help and pay it forward to younger businesses. Right. And we've done some very, very interesting initiatives of founders for founders, which is where in these very, very tough times, we also realized that we all had challenges on the personal and the health front. And we all did our little bit with helping out on the health front, oxygen, etc., and the medical fund. But what we did as GetVantage was set up a small initiative with a nice collective of founders out there called foundersforfounders.org. And I would really, really ask everybody to spread the word, because it's a completely no strings attached, paid forward community. Because we realize that in these vulnerable times, we all as business owners and founders also want to be able to have a sounding board, a mentor connect, somebody to validate. What do I do in these tough times? And just that kind of support system and ecosystem that we are building, I think takes our mission and our purpose that one step forward.
Wonderful. Bhavik, before we wrap up, it was the end of the conversation, right? But I particularly want to pick up on the Bharat piece today, right? Something that, all of a sudden, I mean, it is something which has existed, right? But given that we were in a lockdown, given, we went through what we did, this is a conversation which is picked up, right? I think this is something which is being discussed in every single quarter, right? In every form of, either business or, in terms of funding, in terms of visibility, and so on and so forth, right? While it's exciting because it brings in a huge surge in the possibility of consumption, right? With so many people coming on, and starting to transact. What it still does is that it's a market which is still very unfamiliar, right? With many business models that have been built, right? Possibly some of the business models that you've kind of funded, right? They're still not businesses that have served to Bharat, right? How do you see that, right? I mean, how do you see that? How are some of your businesses reacting to that situation, right? How do you think it's going to improve the position of an RBF layer? I mean, does it also becomes another added layer that, if Bharat starts to contribute, the visibility and the possibility of revenues is going to be much higher, which essentially means that's going to insulate you with, say, urban market risks, which, like we discussed, right, with many influences, right, and dynamism in consumption. This is something which could be a slightly slower layer and which could sort of limit that or insulate you from that urban market risk.
Sure. So the way we track impact at our end, Ashu, is the impact we are creating as GetVantage by, like I mentioned, what kind of sectors, categories of founders and businesses we are being able to fund, how we are able to reach beyond the metros, right? Beyond the usual suspects, that is go really that one layer deeper, right?
Right.
To really back businesses that are coming online from there.
Right.
We are seeing tons of husband and wife couples coming together and setting up an online business in an online shop. And I think that's the new avatar, right? We've seen
Right.
this, right? Ages ago, small businesses came up with small stores that were built up within
Right.
the family, and that stayed in generations. And I think that's what we are seeing, just with a slightly more online avatar as well. That's one way we see impact. The second way we measure impact is also the businesses and the brands and the portfolio we've funded and fueled. We actually track their GMV and their growth as well. We are able to understand and see that really with the capital that they're taking from us to fuel a little bit more of their reach, their digital spends, their digital marketing, spend a little more on logistic partners, right? Is that the impact we've been able to create is now these businesses have been able to serve more and more customers.
Right.
And what we are seeing is that new growth of that revenue and sales is not coming from the saturated markets. It's actually being able to come because they are able to distribute and reach those tier 2, tier 3 towns and cities where customers are also consuming and ordering from.
Right.
And the third interesting way we are able to measure impact, right? And the vantage point we literally have is an understanding of few trends we are able to pick up cross-sectorial, few trends we are able to pick up very early and see how the consumer shift is happening. I'll tell you 2, 3 interesting consumer shifts we've seen, right? And these are all part of the inflection point that every industry goes through. I spent 10 years in digital payments, and Ashu, for a long time, my friends and family didn't know what I did, right? It was only after Modi ji went and said demonetization in 2016 that suddenly digital payments became the top of the mind share.
Yes.
And now we are seeing in the consumption journey of India, this last 12, 18 months of the pandemic have created some sort of an inflection point. Where we've seen 2 very, very drastic changes happening. Number one is the last decade, consumers were buying a lot more from just the marketplaces. Right? We were buying only from the Amazons and the Flipkart, right? And those are continuing to grow. But what we're starting to see is that consumers are now also buying directly from the brands, directly from the brand's captive website and the captive online store. Right. And I'm seeing that as a big, big consumer shift across categories and segments. And the second big shift we have seen is that the entire e-commerce story in India over a decade was marred by this overhanging play of cash on delivery, or the COD was this big untalked about white elephant in the room. But we are seeing that while consumption is growing, right? But we are seeing that the ratio of COD is starting to come down because now consumers are that much more comfortable to do digital payments. So things like UPI, things like the card penetration has further fueled where consumers are not only buying directly from the brands, but they're also being able to buy and prepay for a lot of that, right? And I think these are the subtle trends that are game changers and that have happened. And this is what's causing this great inflection point, right? And so really, this kind of intelligence, cross-sectorial understanding, not only are we able to give to a lot of our portfolios and our brands, we're able to say, move away from COD, let's do a lot more prepaid. Let's buy a consumer, let's incentivize a consumer if he's prepaying versus postpaid and a COD model, right? And I think all of this is going to bring and add a little more sustainability to your earlier question, right? We don't know how this is going to play out, but we clearly know that the world is looking at the Indian consumption story, and it has to be won by our local brands, and it has to be served by the Bharat, right? The next billion consumers are coming from the Bharat, right? And can we not only have homegrown brands that are Indian or local, but are that much more geo-local, serving that much more geo customers, and a brand that could be serving India and Bharat as similarly and simply because of digital payments and technology, and now our ability to reach that customer in the remotest corner.
Interesting. And there are a bunch of initiatives that you are kind of already working on and championing, right? When it comes to cultivating Bharat. Bhavik, last question in the conversation. What are the next 2 years like? How's been the last 1 year? We didn't talk about it, right? How's been the last 1 year? And what are the next 2 years like, right? I would have loved to ask you a 5-year question. Unfortunately, I think 5 years is just too long a time, right? So I think, what are the next 2 years like?
And I think one of the things the last 1 year has taught all of us is stop planning and predicting, right? Because it's very difficult.
Absolutely. Yes.
But I'll tell you, Ashu, honestly, having been an operator, building and scaling up businesses, you
Right.
think it's easier the next time around.
Right.
But not only building an innovative, first of its kind platform and business and venture,
Right.
but building a team, serving this much demand. Yes, it's been phenomenally crazy, is the word
Right.
I can use. Good problems to have, good problems to serve and scale that quickly.
Right.
I can tell you very simply, we've grown month on month, and we've
Right.
doubled month on month on every parameter, be
Right.
it the number of brands we've serviced, number of deals we've serviced, number of or our revenue itself, right? But at the same time, I think what we are looking at the next couple of years in front of us is literally leveraging and capitalizing on this pole position we have.
Right.
We have been pioneering and championing this new innovative alternative funding platform.
Right.
We literally have the tech in place. We've proved the model with the first cycle of deployment and collections. And I think the next couple of years is going to really go out there, really make a difference by championing this alternative model,
Right.
taking it to more and more deeper markets of India, but also with aspirations to be able to take our platform into one more market of Asia, an emerging market of Asia,
Right.
in this next couple of years. And that's really what we look at in front of us, and really taking and driving that, lastly, that ethos, right? Really, we want more and more people to come up with alternative such models. But
Right.
at the same time, if we are able to champion and fuel and fund this internet economy and really be that brand with profits, with purpose and mission, right? And really be able to fuel and back these founders. I think that's where you will see me personally and the team at GetVantage really championing the cause over the next couple of years, fuel the India story, and be able to take our platform to one or two more markets of emerging markets in Asia.
Bhavik, I mean, how I wish this conversation could go on, and so many questions that I could ask, right? But I think in the limited time that we had, we've tried to cover quite a bit. It was a pleasure to have you with us. I think with what you're doing, I think is super interesting, right? There are many questions that you've tried to answer. There are many questions that you'll have to answer, right? I think the models are evolving. The consumer base is kind of evolving, right? It's becoming smarter. Preferences are becoming smarter. But I think the only constant that is there across, I think many markets that exist within our continent, India, is essentially the appetite to consume digitally, right? I think which is like you highlighted in the conversation, right? And with elements like UPI coming in, and I think there is a certain confidence, right? Inhibition going away, confidence coming in, of being able to transact, right? I think that fear of unknown is kind of going away when it comes to digital, right, environment, and people are getting more and more comfortable to operate it, right? There's traceability which is coming in, and I think that's going to be the common denominator across, I think, whatever we sort of get into, right? Which essentially means that there could be temporary aberrations when it comes to, say, the credit models and the risk models and risk mitigation mechanisms and stuff like that. But I think they're going to be aberrations. I think the model will evolve into adjusting all of that. And I think India is a growth story for next 10 years, right? With that, Bhavik, it was a pleasure to have you with us. Thank you so much for being a part of it. I loved every bit of the conversation. Thank you.
Ashu, absolutely. Yeah. I think there couldn't have been a better way to summarize our conversation by really saying that the purpose does not change. We really believe that the India growth story is here to remain. The consumption story is here to only take off. And what is that small role that we can play a part in fueling, funding, and backing? And I think that's really what we are on a mission and a purpose to chart out. And I think with your platform and folks like you, I think there's no better way to spread the word and build the awareness that there is an alternative mechanism for business to be able to access capital and keep growing in the most founder-friendly and frictionless way. So help us spread the word.
Thank you, Bhavik. It was a pleasure to have you with us.
Thank you so much. Thank you, Ash.